as I mentioned in my markets intro, a very underwhelming day on the All Share today. And I'm wondering if that's got anything to do with the digestion of the Fed's tone, as well as that record-breaking UK inflation that came out. I mean, those were scary figures that were posted by the United Kingdom in terms of their inflation.
Yeah, you're absolutely correct. I think the market got a little excited, a little overexcited, definitely, in the last couple of weeks. I mean, we had a very strong bounce in July and in August, and I think the big catalyst was that US CPI number that came in kind of ahead of expectations. So I think the market got a little excited, but now starting to realize after the bounce you've had that there are still overhangs. And like you said, the numbers from the UK and the Fed's tone kind of reminded us that there are still a few things that need to play out. There are still a few overhangs. And I think the market is now kind of being a little bit cautious and waiting for some data points before moving in another direction.
Let's talk about the Rand, Martin. It was actually showing some really good strength earlier on, and it was indicated that there is the story about a stronger US dollar kind of dragging it down. And it's really frustrating because the Rand was strengthening, the price of oil was falling, which that price gives me major anxiety, by the way. And now we're seeing a little bit of a pullback. What are we seeing when it comes to the local unit?
So I think it's the same with markets. I think maybe the Rand got a little excited and we saw it bounce quite strongly off that 1610 level, which is a very key level. And again, I think it was largely a function of risk on appetite globally, people getting a bit excited. But now I think it's probably reflecting the reality of things for right now a little bit better, probably fair value for right now. But again, the Rand is, and I've been saying this for years on the show, the Rand is very volatile. I mean, we were at, 1450 a couple of months ago. So I think just sit tight, but again, probably around about fair value for now.
Company results. We had Cura as well as xaira, but let's start with Cura. So they've reinstated their annual fee increases, but they also did see a rise in average student numbers coming through for them in the reporting period. Overall, what did you make of their numbers, Martin?
I thought the numbers were okay. Yeah, okay to pretty good, if that makes sense. Look, it's a company that did obviously very badly during COVID from a share price perspective. It's now starting to have a little bit of a rebound as things get back to normal, growth in revenues picking up, but you still see them spending a lot more money on CapEx than money coming in. And until that starts to improve, it's one that I'm happy to sit on the sidelines with for now. I mean, debt is still increasing, still looking a bit expensive. So it's starting to do the right things. It's starting to go in the right direction. But for now, from a share price perspective, happy to sit on the sidelines.
xaira, what do you think? Thermal coal really doing wonders for companies like xaira. 2 days ago, we saw the same with Thungela.
Yeah, absolutely. I mean, these companies are in an absolute sweet spot at the moment. And like you mentioned, it was the thermal coal side of the business that massively offset what was happening from an iron ore perspective. So overall, very good set of numbers. Net cash positive position at the moment. So people thought the dividend might have been a little bit better than it initially or than it was. That's the only slight downside. Look, I prefer to get my thermal coal exposure through something like a Thungela, like you mentioned, even something like a Glencore. But for those holding this company, I'd continue to do so. Like we said, thermal coal is still holding up. I think results will improve in the second half, and it's looking cheap. So happy to hold it from here if you have xaira, definitely.
What about Turkey? I mean, they dropped the interest rates from 14% to 13%. So this is completely mismatching with other central banks and what they're doing at the moment. And we must remember that the inflation levels in Turkey are crazy. They're mind-blowing. And yet this is the decision that was made by their central bank. What are your thoughts on that emerging market?
Look, I think the rest of the world is as shocked as you are because, like you said, it's completely counter to what we're seeing across the rest of the world. Like inflation is 20+% at the moment, and then they choose to lower interest rates. So I think it's potentially a political decision as opposed to an economic one. You're going to see the Turkish lira depreciate from here, and you'll see inflation pick up from here. So not great for Turkey from an economic perspective. And like I mentioned, a bit of a shock. And yeah, if you're going to Turkey, now is probably a good time.